Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's guests are Steve Freed, Vice President of Grain Research, and Alan Bush, our Senior Financial Economist here at ADM IS. And now, Steve, my first question. How are grain markets reacting to the aftermath of Hurricane Ida?
Well, right now we're lower because of concern that there might be some logistic issues at the Gulf that could slow export pace down there. So I think without power over most of New Orleans, I don't know if hurricane itself was as bad as Katrina. But they have to kind of check the flooding and it might disrupt some of the exports. So we're down today in corn and beans because of that potential disruption.
Okay, let's move over to Alan. Alan, what are the market implications of Fed Chair Powell's interest rate comments on Friday?
Well, first of all, he was very dovish in what he had to say. He indicated that the taper, of course, was still on the table, but they really gave no timeline for when the taper may start. And he also made comments that suggested that the tapering may be decoupling from when the Fed actually raises interest rates. So the comments were very dovish and markets responded accordingly.
Okay, and what is the outlook for the 30-year Treasury bonds?
Okay, well, Powell's comments supported the long end of the curve. In fact, it supported the entire curve, but especially the long end of 30-year Treasury bond futures, and there were good gains there. Also, we are seeing some follow-through strength today. Also, still plenty of concerns about the state of the global economic recovery. So all of these fundamentals that I'm looking at least the dominant fundamentals, suggest that there will be follow-through gains for futures, especially for the 30-year Treasury bonds.
And will stock index futures continue to advance in price?
I think they will. And in fact, today we did see some new record highs for the S&P and the NASDAQ futures. So with Powell's comments, as they were, suggesting no near-term tapering and a Fed funds rate hike farther off in the future, all of that is very supportive to the stock index futures. So yes, I think we will see some follow-through strength across the board in stock index futures.
All right, Alan. Steve, let's get back to you. What is the latest technical signals on corn, soybeans, soy meal, soy oil, and wheat?
For each of the markets, they're all interesting in that for the corn market, we're in this wedge formation, which supported 532 on the December 583 resistance. I doubt if the market goes up to the higher end of resistance before harvest, before the USDA September 10th report, and before we get through all of the uncertainty of our export market. At 532, though, I think that price is too low given the tight supply situation and the lack of farmer selling. Soybeans are in the same wedge between 1281 and 1359 with downside and upside risk the same 40 cents. And again, we're trying to figure out Chinese demand, if the rains right now is helping increase the U.S. soybean crop, and just what's going to happen as farmer selling is concerned. The meal market is up against a simple moving average for 7 straight days at 356.30, and while the domestic basis is firm, global protein demand seems to be down, and so that's limiting the upside in meal. Soybean oil has had some very violent trade. Number one, concern about biofuel demand down the road. Number two, just kind of wondering what the COVID is going to cause as far as demand for cooking oil worldwide. And then number three, just what happens if the crush starts getting up in new crop and if that starts having soybean oil stocks. Palm oil prices are also extremely volatile depending upon Asian demand. And the wheat market's in a 720 to 750 trading range. Most people think we'll break out the upside of that range once we know a little bit more about the direction of the dollar and a little bit more about global production, especially in Canada, and Russia and how tight world supplies are going to be.
All right, Steve, heading into September, how important are the upcoming USDA reports, and what do you think the impact to futures will be?
I think we've learned over the last year that every USDA report is critical and violent as far as trade action is concerned. On September 10th, they're going to give us new production numbers. And the perception is that old crop 2021 corn and soybean carryouts are going to go up a little bit because the demand might be down a little bit. There's a big debate on what the corn and soybean yield's going to be, with some people thinking that the corn yield might be down a little bit with drier and warmer conditions in August for the corn, but that soybeans might be up with these recent rains. And so most people are looking for 21-22 corn, soybean, and wheat carryouts to be down from their August estimates. Globally, we could see tightening of world wheat supply and demand, and also we could actually see lower numbers as far as carryouts for corn. And so for soybeans, though, we might actually see a little bit increase depending on what they think China imports are going to be. So it's going to be a really critical report. And then on September 30th, they give us grain stocks as of September 1st. And that kind of ends the marketing year for corn and beans and gives us an idea of that wheat usage during the previous quarter.
And what is the latest U.S. farmer marketing plans? Should they sell more 2021 cash crops?
Farmers, I think, have sold as much as 40% of their 2021 crop that they're about ready to harvest. Pretty much sold out of all the hard wheat and about 50% sold of spring wheat. So there's not really a lot for the farmers to do right now, especially at these price levels. And we'll be watching pretty closely that they might store most of the corn and soybeans that they have left, which will make the basis pretty strong. So not a lot of people are recommending that farmers sell at these price levels, and most people are looking for a little bit of a bounce after harvest.
All right. Well, thank you both. This has been informative. Remember that the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, please visit admis.com.